keep price, you become CA. Chalo. Internal reconstruction, very simple chapter. I know in this much discussion is not required because this is one of the chapter which every CA inter student like. Yes or no? Because nothing to teach, only there are few journal entry that you need to understand. Now, internal reconstruction, you know. What is internal reconstruction? Whenever a company become a weak company, loss making company, then some reconstruction required internally. What is that internal reconstruction? To write off accumulated losses and to write off accumulated losses by reduction of capital. By reduction of capital. So what are the accounting treatment that we need to understand? So let us first revise all the accounting treatment, then we'll take some questions. First is alteration of share capital. Alteration of share capital means what? Alteration of share capital means what? I am not asking, I am explaining. Alteration of share capital of two types. One is known as what? Subdivision of shares. One is known as consolidation of shares. Subdivision means what? Shares of higher denomination will be subdivided into lower denomination. Denomination means face value. Means if suppose there is one shares of rupees 100 each, so it will be subdivided into 10 shares of rupees 10 each. But ultimately the paid up capital remain same. Means can I say in alteration of share capital, whether it is subdivision or consolidation, number of shares will change, but paid up capital remain same. Similarly, consolidation means what? The shares of smaller denomination will be consolidated into shares of higher denomination. Means if I say there is one shares of rupees 10 each, so what will combine two shares of rupees 10 each and will make it one shares of rupees 20 each. So two shares of rupees 10 each will become combined, will be consolidated into one shares of rupees 20 each. So once again number of shares changes and paid up capital remain same. Normally in this what happened ki we are just converting transferring equity share capital of one class into another class. Means initially it was of rupees 10 each, now it become of rupees 20 each. So whenever there is changes in the class of shares without changes in paid up capital, so journal entry remains same, old share capital into new share capital. Means old share capital will be debited, reduced, and new share capital will increase. And you can see there is no reduction in the share capital because the paid up capital remain same. So the journal entry is what? Whenever the class of shares changes, so we'll debit old class and we'll credit new class. So journal entry become what? Share capital of old face value debited to share capital of new face value. Similarly, the entry in consolidation also remain same, and this amount remain same. Very simple. Subdivision you understood. Then come next point is what? Conversion of fully paid up shares into stock or stock into shares. However, normally they don't ask this type of question. This is a concept of actually Companies Act. Sometime what happen? We combine some group of shares and we make it a stock. Means group of shares is known as stock of shares. Correct? So if we have converted group of shares into stock capital, the journal entry become equity share capital account debit to equity stock account. So suppose 5 shares of rupees 10 each has been converted into what? Stock capital. So what will journal entry? Equity share capital rupees 50 to equity stock what? Rupees 50. However, this type of question they will not ask in exam, but suppose they ask, you should know it. And if you convert stock into shares, then reverse journal entry. Equity stock account debit to equity share capital. Correct? Okay. Now reduction of paid up capital, this is important. Reduction of paid up capital. Because the chapter demands what? Reduction of paid up capital, because that reduction amount will be used to write off accumulated losses. Now this reduction of paid up capital can be done in two ways. Reduction of paid up capital with changes in face value. Reduction of paid up capital without changes in face value. Correct? So which changes in face value means class of shares changes. So what journal entry will do? Share capital, old face value account debit to share capital, new face value, and the difference will be reduction, and that reduction will be transferred to capital reduction account. That reduction will be transferred to capital reduction account. Means in this chapter we'll open one capital reduction account, and that capital reduction account will be nothing but one type of nominal account in which entire gain or loss will be transferred. Entire gain or loss will be transferred. Okay, sir. Now, if there is a reduction in paid up capital without changes in face value, means there is no changes in the class of shares. So it means only we are doing reduction without changing the class. Then our journal entry will be share capital account debit to capital reduction. Means this journal entry will be done only with the amount of reduction. Amount of reduction. So what journal entry we have done? Share capital account debit to capital reduction. Capital reduction. If question is silent, कि whether it is with or without changing face value, what assumption you will take? Suppose question has given one point, nothing has been specified whether it is with or without changing face value. Always assume it is with changes in face value. So that assumption will take, it will be with changes in face value. Understood? From examination point of view. आगे चलें? Yes, sir. Then reduction of liability in respect of uncalled capital. Now there can be some partly called up shares. Suppose we have 10,000 shares of rupees 10 each and rupees 8 called up. It means how much uncalled? Rupees 2 is uncalled. So sometime question will demand that reduce uncalled capital. So can you say if you are reducing uncalled capital, so there is no changes in amount. Only the face value will be changed from rupees 10 to rupees 8. Means it will be changed from rupees 10 to rupees 8. Once again there is changes in the class of shares. Changes in the class of shares. Because paid up capital remains same. Paid up capital remains same. In this case what will happen? A partly called up shares will now become fully called up shares. So if you cancel uncalled capital, so partly called up shares will now become fully called up shares. So what will be journal entry? Share capital old face value to share capital new face value. Once again your journal entry remains same. So in this also nothing has been transferred to capital reduction account. Nothing has been transferred to capital reduction account. Means capital reduction account will always arise only when there is a reduction in capital. Only when there is a reduction in capital. Okay, sir. Then reduction of paying of the surplus paid up capital. Sometimes the question will demand that pay up, the means equity shareholders paid for the surplus capital. If there is a payment, so it means the bank will come. Means payment will be done through bank account. So what journal entry will do? Equity share capital account debit to bank. So equity share capital account debit to bank. Sometime in this also there can be two situations. Face value has been changed. Face value has not been changed. If the face value has not been changed, then share capital account debit to bank. But if face value has been changed, so share capital old face value to share capital new face value, and that difference will be paid. Payment will be done through bank account to bank account. Understood? Correct. The next variation of preference shareholders right. Now preference shareholders, what they will say is some rate of dividend will change. Means initially suppose there was 10%, now it become 8%, and the difference will be transferred to what? Means the difference in capital will be transferred to capital reduction account. So what will be journal entry? Old rate of dividend, means we can say old preference share capital account debit to new preference share capital account, and difference will be transferred to capital reduction account. Same thing we can do for debenture holders. Debenture holders also rate of interest might change. Initially 10%, now it become 8% or 15%, whatever. So new old debenture account debit to new debenture, and difference will be transferred to capital reduction. Difference will be transferred to capital reduction as per the information given in the question. Correct. Then reduction of claims of other liability. Means there might be reduction in the claims of liability. Liability means it can be created, it can be loan account. So if there is reduction, liability account debit to capital reduction account. Liability account debit to capital reduction account. Means this gain will be always transferred to capital reduction account. Similarly, there can be some other journal entry as per the information given in the question. For example, for surplus on revaluation asset, increase in asset. So what journal entry will do? Asset account debit to capital reduction account. Asset account debit to capital reduction account. If there is a decrease in the value of asset, then capital reduction account debit to individual asset account. Now you might be thinking, sir, why we are not applying AS 10? For example, there is a PP and PP may there is an increase in the value of asset. So as per AS10, right now we have done, yesterday we have done that any revaluation gain is transferred to which account? Revaluation surplus. But why we are transferring it to capital reduction account? Now, but AS10 will be applied or not? No, this is not a. Just try to understand. What is my question? Try to understand. I am saying if there is a PP and there is an increase in the value of PP, AS10 will be applied or not? Can you violate the principle of AS10? AS10 is mandatory or not? So as per AS10, you are a CA interest student. You will apply AS10 or not? If I am teaching, will you convince from me? No, because first I have taught what? AS10. Now I am teaching internal reconstruction. Will you ask me a question, sir? Why you are not applying AS10? Ask me that question. So this should be a valid question or not? I'll give the answer. There is something in that. But can I say, as a student, there is a 100% one doubt. Why we are not transferring this gain to revaluation surplus? Because AS10 should be applied or not? Correct. Do you know the answer? So loss making company, we don't apply AS. Who said it? No. Any company which is a loss making company, will you not apply AS10? You are saying it is a loss making company. So AS10 is not applied. One by one, right? Please, we are not fighting, we are discussing. Where it is given, what is specific? Full information has not been given. This is so everyone knows. This whatever saying, everyone will say that only. Now coming to the point, court order. Now I got the answer. One sentence, you become CA. Understood? Means just this is the difference. Whatever you are saying, your answer might be correct, but not correct as per ICI. I'll give you anda. You are saying AS10 not applied, correct? But your reason is not correct. I'll give anda. He said AS10 will not be applied, but his reason is correct. I'll give 5 out of 5. This is the difference. Difference you understood? So you need to give a specific answer. What is the correct answer that you need to give? What happened under internal reconstruction? However, this type of question they will never ask in exam, because theoretical question they will never ask. But whenever a company is internal reconstruction, so they need to take the permission of High Court. Till High Court has given permission, we can't do internal reconstruction. Now, once the court has given permission to write up losses by reduction of capital, so all accounting standard become null and void. Now, will not apply any AS, will not apply any Companies Act also. Now, will do as per the guidance given by High Court. Understood? Are we able to understand what I am saying? So, once High Court has given permission to do internal reconstruction, then we don't apply, means we don't do accounting as per our Companies Act and as per our accounting standard. But once it is internally reconstructed, then again will follow what? AS. Then again books of account will be prepared as per accounting standard only. Only for this scheme will not apply any accounting standard. Therefore, any gain, any loss will be transferred to which account? Capital reduction account. Understood? Yes, sir. Very good. Excellent. Now, for settlement of contingent liability, can I say contingent liability will be either cancelled or it will be paid? If paid, then what journal entry? You are paying. Contingent liability is cancelled. First cancelled, then what journal entry? Contingent liability cancelled, then what journal entry? Contingent liability is not recorded. If cancelled, no journal entry. Correct now? If any contingent liability that was not recorded only, so if it is cancelled, no point of any journal entry. So if it is cancelled, no journal entry. This is very, very important. But if it is paid, so if you are paying any unrecorded liability, it becomes your loss. Loss means what? Capital reduction account debit to bank. Capital reduction account debit to bank. Now, students are normally confused with these two questions. Suppose if I say creditor, if I am saying creditor, so creditor is settled and cancelled. Settle means paid, huh? So there can be two situations. If creditor is settled, what journal entry? Creditor account debit to bank. If cancelled, then creditor account debit to capital reduction account. It means here creditor account debit to bank. Here creditor account debit to capital reduction. But if it is a contingent liability, if settled, then what journal entry? If cancelled, then what journal entry? Cancel what journal entry? No entry. And settle, then capital reduction account debit to bank. Understood? Both are liability, but this is liability, this is contingent liability. Contingent liability is not a liability because it is not a present obligation. For liability, there are three conditions. Correct now? So contingent liability is not shown in the balance sheet. It is shown outside the balance sheet as a disclosure. Understood? The difference you understood? Yes, sir. This is very popular. Normally in exam they give arrear of preference dividend. Can I say any preference dividend which is not paid is a contingent liability? So we call it arrear of preference dividend. So normally this type of information will be given that arrear of preference dividend has been cancelled. Then no journal entry. Arrear of preference dividend has been paid. Then journal entry. Then capital reduction account debit to cash or bank. Understood? Understood? Yes, sir. Then what for cancellation of unrecognized capital commitment by payment of penalty? Now unrecognized capital commitment. Capital commitment means one type of executive contract. We have done under AS 29. Suppose, and I have given an example of purchase of machinery. So you have done one contract to purchase the machinery after 3 years. Correct? So that was an executive contract. Will you do any journal entry for that? Whether executive contract will be recognized? No journal entry because AS 29 is not applicable. So can you say it is not yet recorded in our books of account? But that because now it become an internal reconstruction company, so it might be cancelled. Now when you are cancelling it, you need to pay some penalty. So for payment of penalty, one journal entry will be done. For payment of penalty, what journal entry you will do? It is a loss. So what journal entry? Capital reduction account debit to cash or bank. Means for cancellation of unrecognized capital commitment, no journal entry. When you are cancelling any capital commitment, no journal entry. But for cancellation, you are paying penalty for that journal entry. So in exam, they confuse you that there is a capital commitment to purchase the machinery worth rupees 2 lakh. Now it is cancelled by payment of penalty of 10,000. But you will do journal entry with what amount? With what amount? Only penalty amount. Only penalty amount. But students are normally confused about this particular amount. Understood? Have you understood? Now for payment of reconstruction expenses, because of course you need to pay some high court fee, etc. So there will be some reconstruction expenses. So what journal entry? Capital reduction account debit to cash or bank. Means any payment done for any expense which is not recorded, your journal entry will be capital reduction account debit to cash or bank. Understood? Then once this journal entry has been done, then what we'll do? We'll write off accumulated losses. Accumulated losses, correct? We write off accumulated losses with debit balance of PL account. In this chapter, always balance sheet will have debit balance of PL account. Means PL in negative sign. PL in negative sign. So that will be written off. There may be some fictitious asset, but nowadays I have seen they are not giving any fictitious asset. Fictitious asset means any expenditure which is not yet charged to profit and loss account. Normally in old syllabus they used to give. So it is quite possible if they have copy pasted that question, they may give some fictitious asset. Means initially I said before AS 26 there was a concept of deferred revenue expenditure. So if they have taken questions from old scheme of syllabus, they can take that question. So if there are some expenditure which is not yet charged to PL account, that become what? Fictitious asset. For example, preliminary expenses. For example, underwriting commission which is not yet charged to PL account, so that will come in the asset side of balance sheet. So if that is coming in the asset side of balance sheet, that become fictitious asset. So that should be also written off because that is also one type of loss. And goodwill, can I say any internally reconstructed company cannot have goodwill because that is a loss making company. So even though question is silent, we'll write off what? Entire goodwill. Entire goodwill. So this journal entry will be done even though question is silent. So what will be journal entry? Capital reduction account debit to PL account to fictitious asset if any to goodwill account. To goodwill account. After this, all journal entry will close capital reduction account. So there can be two situations. Either capital reduction account will have zero balance, or it may have surplus balance. It cannot have negative balance. If it is coming negative balance, means either question is wrong or you are doing something wrong. So capital reduction cannot have negative balance. Either it will have zero balance or it will have surplus balance. The surplus balance of any capital reduction account will be closed by transfer to capital reserve account. So if it has surplus balance, it will be transferred to which account? Capital reserve account. Understood? Correct? Entire journal entry done. Okay. I hope you know about that. Once the company is internally reconstruction, then we'll add and reduce with the name of the company. With the name of the company. So whatever balance sheet you are preparing after this scheme, just write down balance sheet of the company and in bracket write down and reduce. And reduce. Even though question is silent, write down this word. If you are not writing, they have a right to deduct your marks. Okay. Chalo. Capital reduction account is also known as capital reconstruction account or capital reorganization account. So suppose they ask you to prepare capital reorganization account, don't be confused. Capital reduction, capital reconstruction, capital reorganization, all are same. However, if nothing is given, use which account? Capital reduction account. Chalega. Okay. This I will come again. Up to this to done. So can we take some questions only for practice? Chalo. Webo Limited gives the following ledger balance: property, plant and equipment 25 lakh, investment market value how much? 19 lakh, and book value how much? 20 lakh. Current asset, PL account debit balance, share capital 6% cumulative preference shares, 5% debenture, creditor, provision for tax. Whenever they give ledger balance, that's what you should do. Once you should find out the total of all asset and all liability. Just see whether the total is coming same. Check karo na. Coming. So whenever they have not given balance sheet, just cross check whether the total is same or not. Normally, to confuse you, what they will do, they will not give you debit balance of PL account. So debit balance of PL account will become as a balancing figure. So whenever they have not given balance sheet, just find out total of debit and total of credit. Any difference will be transferred to PL account debit balance. Understood? Correct? Now let us do it. All the existing equity shares are reduced to rupees 40 each. So from 100, it become what? 40. So what will be your journal entry? Equity share capital. Equity share capital of rupees 100 to equity share capital of rupees 40. And the difference will be transferred to which account? How much the difference? 60 lakh na? 60 lakh. Transfer to which account? Capital reduction account. Journal entry you can do. Dekho journal entry is this. Whatever. Sorry, oh, number of shares is something different. My mistake. Number of shares is what? It will be 1 crore 20 lakh. 1 crore 20 lakh. My mistake. Okay. Journal entry you can do. Yes, sir. All preference shares are reduced to 60s. Once again, same journal entry. It will be 6% cumulative preference shares of rupees 100 is 1 crore to 6% cumulative preference shares of rupees 60 is. Amount you can find out how much will be transferred to capital reduction. Give me amount. 40 lakh will be transferred to capital reduction account. Journal entry you can do. Journal entry is this. Okay. Take it. Then the rate of interest on debenture increased to 6%. The debenture holders surrender their existing debenture of rupees 100 each and exchange the same for the fresh debenture of rupees 70 each for debenture held by them. Means there are two changes. Number of face value also change and the rate of interest also change. Correct? Means what will do, 5% debenture of rupees 100 each, 80 lakh, to 6% debenture of rupees 70 each. How much? 70 is now. So what will be the capital reduction here? Capital reduction? I don't have calculator. Bolo. 24 lakh will be capital reduction. Okay, sir. Journal entry you can do. Okay, sir. Can we move? Yes, sir. The next point is what? Property, plant and equipment is to be written down to 20%. Means this was credited, this was credited, this was also credited. So it was written down by 20%. How much? Property, plant and equipment written by 20%. How much 20%? 50 lakh. So 50 lakh will be debited or credited? So 50 lakh will be debited. What journal entry you will do? Capital reduction account debit to PP. Okay. Current asset are to be revalued at 90 lakh. So what is current asset? 2 crore. Now it become 90 lakh. So once again reduction. So how much reduction? 1 crore 10 lakh will be debited. 1 crore 10 lakh will be debited. What journal entry? Capital reduction account debit to current asset. Then investment are to be brought to their market value. So 20 lakh is book value. Market value is 9 lakh. How much reduction? 1 lakh. So 1 lakh will be debited. 1 lakh will be debited. What journal entry will do? Capital reduction account debit to investment. However, can you say we can compound these 3 points? We'll pass one compound journal entry, capital reduction account debit to PP, to current asset, to investment. Okay, sir? Yes, sir. Point number 7. One of the creditor of the company to whom the company owed 40 lakh decided to forgo 40% of his credit. The creditor is allocated with 60,000 equity shares or with 40 in full and final settlement. Means simple, creditor account debit how much? 40 lakh. How much cancelled? 40% cancelled. So 40% cancelled means how much transfer to capital reduction? 40 lakh ka 40%, 16 lakh will be transferred to capital reduction and balance will be transferred to which account? Equity share capital. So equity share capital will be how much? 40 lakh minus 16 lakh. How much? 24 lakh. 24 lakh means how many equity shares? 60,000 of rupees 40 is how much? 24 lakh only. Means we are doing correct. So how much capital reduction credited यहाँ पर? 16 lakh will be credited. 16 lakh will be credited. चलेगा. तो what journal entry? Journal entry check करो. Sundry creditor account debit 40 lakh to equity share capital 24 lakh to capital reduction 16 lakh. Okay. Then taxation liability is to be settled at 3 lakh. To settle 3 lakh, what is the provision for tax? 2 lakh. Now it is settled at 3 lakh. Means you need to increase. You need to increase. So what journal entry will do? Capital reduction account debit to provision for tax. How much increase? 1 lakh. Now they have given settled. So there can be two assumptions. Either it is paid or not paid. So normally if it is nothing given, so we'll assume it is not paid. But sometimes IC has done payment journal entry also. So but better assumption it is not paid because nothing has been given about payment. Because payment we can't do by our own. So we'll always assume that payment has not been done. So only will increase the liability by rupees 1 lakh. So 1 lakh will be debited. 1 lakh will be debited. It is decided to write off. Can you say this point is not given? Then also we write off. So what journal entry will do? Capital reduction account debit to PL account. PL account how much? 12 lakh. So 12 lakh will be debited. Now we'll find out the surplus in capital reduction account. So just take this is plus 40 lakh plus 24 lakh plus 50 lakh minus 1 crore 10 lakh minus 1 lakh minus 16 lakh plus 1 lakh minus and 12 lakh minus. What is the balance? How much surplus balance in capital reduction account? This debit how? 1 crore. 12, first do total of credit 12 lakh plus 40 lakh plus, अच्छा it is 1 crore 20 lakh, चलो ठीक है, 1 crore 20 lakh plus 40 lakh plus 24 lakh then plus 16 lakh. What is the total? 2 crore, 2 crore. Then come to debit side, 50 lakh plus 1 crore 10 lakh plus 1 lakh plus 1 lakh plus 12 lakh. $170. Whatever is there, you understood? Difference is what? So 26 lakh is surplus. That surplus will be transferred which account? Capital reserve account. So check karo, surplus is what? 26 lakh is surplus. Understood? Transfer to capital reserve. Done, correct? Have you understood? After that, prepare balance sheet. Balance sheet will be prepared in the format. Format means as per division 1 of schedule 3 of Companies Act. That format need to be maintained. Format, you know, I know. Format, if you don't know, we'll do in financial statement chapter. Okay? Understood? This balance sheet is very easy, na? This chapter balance is super easy. My help is not required. Okay? Acha, whether we need to prepare notes to account? Yes. Yes. So what I will suggest that if you have time, prepare it. If you don't have time, so I will say come back at the end and prepare it. Means leave some space. Suppose you don't have time, you are running out of time. So can you see, just if you are not preparing, they will deduct 2 marks. Maximum for this notes to account. So it is a question of 16 marks. So they will give, everything is correct, balance is correct, journal is correct. So they will give you 14 marks. Now for 2 marks, you are wasting your 10 minutes. I will say balance, I will say do, means in the balance time you can do a question of 10 marks now. What is more important? 2 marks is important, 10 marks. So if you are running out of time, I will say leave some pages for notes to account. Do some good question of 10 marks or 14 marks. And at the end, if you have time, come back. This is what time management. ठीक है ना? हाँ. But notes to account is compulsory as per solution is concerned. But it will not take much time because it is plus only. Okay. Acha. If the question is silent, should we prepare capital reduction account as a working note? Yes. This is also mandatory. This working note will have marks. So whenever they have not asked you to prepare capital reduction account, because we are calculating surplus from this account only. So if you have time, prepare this account also. Once again, if you don't have time, calculate them, you have done past journal entry and go back. So once again, this working note will have 1 mark. So for 1 mark, why you are wasting so much? But every mark counted. So when you have time, do it. If you don't have time, come back at the end. Come back at the end. Okay, sir. But leave some space. Now I will take some good question. What? Jain? Jain? Last attempt paper. Jain, last attempt paper. Na? You give me the question, I'll solve everything. I don't have that question right now. Okay, na? Because in my iPad I have a limited question. Okay. Website, I don't have Wi-Fi. Give me your Wi-Fi. Chalo, I will connect my. You asked me to do so much thing, na? Hotspot. You have hotspot? Where is Wi-Fi? Chalo. Now what do you want? Jan. Trying to go to ICA, na? ICF boss, board of studies. At. Now we'll go to suggested answer na. Intermediate na. Accounting or advanced accounting? The old scheme, why it is coming? I don't want old scheme. You want? Huh? And this is not uploaded. Both are same only. They. Previous year suggested answer this only na. This one. This one. हाँ. क्या रे? अच्छा फाइनल यार, क्या हो रहा है यार? Intermediate, sir, you gone mad, sir. Sir, you gone mad. MCQ is also given. Means I am mad, you are also mad. I am CA, you will also become CA. Correct na? You want which question number? That also I will find out. 2A. Chalo. On the request of one of the student, will come to question number 2. Where is the question number 2? 2A. This question? Chalo. Sustain Limited. The name is Sustain, means internal reconstruction. Sustain Limited is incurring losses due to adverse market condition. It decided to reorganize the capital structure. The summarized balance sheet is given. You can see beautiful balance sheet is given, and notes to account is also given. Correct? Once you read, but you read fast, because sometimes some information given in the balance sheet only. Say capital, reserve and surplus. Reserve and surplus coming negative means this is a question, correct question. Correct now. Long-term borrowing, trade payable, short-term borrowing, other current liability, interest payable on debenture. Means this other current liabilities, interest payable on debentures. Short-term provision for income tax. Then non-current asset, PP, intangible asset, non-current investment, trade receivable. Then say capital, they have 50,000 equity shares of rupees 10 each and 25,000 equity shares of rupees 8 paid up. So there are two class of equity shares. Preference share capital, they have given 30,000, 8% cumulative preference shares. Okay, preference dividend has been arrear for how many years? 3 years. I can't write down anything in this. Okay, but I can download. Reserve and surplus debit balance is there. Okay, long-term borrowing 10% debenture, PP, freehold property, plant investment, intangible as a goodwill is there. Goodwill is there. So even the question is silent, we write off goodwill. Then non-current investment, non-trade investment at cost. Not done. Okay, let us do one by one. Subsequent to approval by court and all interested party, the following scheme of reconstruction was agreed. Uncalled capital is to be called up in full. The first uncalled capital will be called. What will general entry? Equity share capital. Sorry, bank account debit to equity share capital. Everyone write down general entry. You write down. I will say. Okay. So bank account debit to equity share capital. Bank account debit to equity share capital. This will be only general entry, na? Okay. What will be the uncalled amount? You can see 25,000 into how much? 25,000 into 2 means how much? 50,000. So can you say after this journal entry, all equity share become of rupees 10 each? Means all are of now same class of rupees 10 each. Understood? The first journal entry done. Then other fully paid up equity shares are to be reduced to 5 rupees. It means now they will reduce 10 rupees shares into what? 5 rupees. Correct? So reduce it. Reduce it. So now we reduce how many shares? 50,000 or 75,000? 50,000 or 75,000? Huh? 50 or 75? From the question it is understood other fully paid. So other fully paid equity shares to be reduced to rupees 5 shares. So they are saying about other. Other means which was fully paid up. Which are fully paid up means they are only saying about 50,000 equity shares. So what journal entry will do? Equity share capital of rupees 10 each to equity share capital of rupees 5 each. The difference will be transferred to capital addition. Do it. Amount you can take from yahan se. Everyone will do it, huh? Right, everyone. Done? Can we move? But they have reduced entire 75,000. English is dangerous. देखो, in this only actually concept will prevail over what English. Once again, uncalled capital is called up in full. Oh, I have not read carefully. And such here, देखो, we have not read the English carefully. It means if I am also not reading, I am also doing mistake. I am also done mistake now. We have not read. And such shares and other fully paid up equity shares. And such shares and other fully paid up equity shares means entire 75,000 reduced. It means in this chapter English knowledge should be good. Okay? Means we have not read carefully. Okay? So 75,000. Do journal entry for 75,000. Correct? Can we move? Amount you write down. I am not saying amount. The next point. Preference shareholders will accept a reduction of 2.5 per share. In exchange, the rate of dividend is to be increased to 9%. So it means reduction will accept a reduction of 2.5 per share. Means what was the face value? 10 rupees. And now after reduction, it will become 7.5. So reduction of 2.5. So 10 rupees shares will become 7.5 shares. And the rate of dividend will become from 8% to 9%. Can you do? So 9% 8% cumulative preference shares of rupees 10 each to 9% cumulative preference shares of rupees 7.5 each, and the difference will be transferred to capital reduction account. Question you can also open in your mobile now. Chalo, ठीक है, you see here only. Done. Point number 2. So write fast. Means write down PSC. In exam write down preference share capital. Here write down PSC. Okay. चलेगा? Yes. Point number 3. Preference shareholders will forgo their claim of dividend for 1 year. It was area for how many years? 3 years. Out of 3 years, how much they are cancelling? 1 year. And 1 equity shares or rupees 5 is to be issued for the remaining arrear of dividend. Means for 2 years they are issuing equity share. But for preference dividend in arrear, cancel what journal entry? Preference dividend arrear. If cancel what journal entry? No journal entry. So for cancellation, no journal entry. For 1 year, no journal entry. But for 2 years, we need to first find out the amount of dividend. The amount of dividend will be what? 3 lakh into 8% for 2 years. How much? 3 lakh into 8% for 2 years. How much? 48,000. So what will be your journal entry? Capital reduction account debit to equity share capital, because they will be given equity shares. Equity shares. But equity shares will be given of what rupees? 5 rupees. Very good. Excellent. Because now 10 rupees shares has been converted into 5 rupees. Very good. So your journal entry capital reduction account debit to equity share capital account. Amount will be 48,000 and number of shares will be 48,000 divided by 5. Very good. Okay. Same question we have in ICS study material. So this is not a new question. Can we move? Can we move? Okay. Next point. This point number 4 is the popular point of CA inter this chapter. Normally they give. Actually, I was taking that question only. He interrupted. Okay. Mr. X hold 10% debenture of 2,50,000. He is also creditor of 50,000. He agreed to cancel 50% total debt, including interest on debenture. Pay rupees 20,000 to the company and to receive new 12% debenture for the balance amount. Correct. It means, just try to understand what will be the possible journal entry. I need to explain. Means, if I am saying Mr. X is holding what? 10% debenture of what amount? 2,50,000. He is also a creditor of what amount? Creditor of 50,000. And there will be some interest on debenture. This we need to work out. Correct. So, what you need to understand, just try to understand. Let me first explain you. What was the total debenture outstanding? 4,50,000. 10% of 4,50,000, how much? And what is the interest payable on debenture? Just check. What is the interest payable on debenture? How much given? It is given 45,000. It means, can I say this interest is outstanding for entire 1 year? So first you check whether it is for entire 1 year or not. So it means 4,50,000, 45,000. So 2,50,000, 25,000. That we understood. But suppose this is outstanding only for 10 months. Quite possible. 2 months paid. Then 2,50,000 into 10% to 10 by 12 you will do. Got this point? Have you understood? Whatever I am saying, have you understood? Correct. So in this, because it is outstanding for 12 months, so here also will take how much? 25,000. Correct. So what will be our journal entry? We'll say 10% debenture debit, 2,50,000. Creditor how much debit? 50,000 debit. Interest how much debit? 25,000 debit. These are debited. Correct. Now read the balance point of the question. Now what they are saying? Correct. And pay 20,000 to the company. Means Mr. X pays 20,000 to company. Means company is receiving how much amount from Mr. X? So we'll say bank account debit how much? Bank account debit how much? 20,000. Means Mr. X pays 20,000 to company. So company is receiving debit what comes in. So bank account has been debited. This much you understood? Means this becomes the total amount due to Mr. X. This becomes total amount due to Mr. X. For this, new debenture is issued. For this, what is given? For this, to receive new debenture of 12% for the balance amount. Correct? Acha, he agreed to cancel. I have not read. He agreed to cancel 50% of his total debt. He agreed to cancel 50% of total debt. So what is the 50% total debt? So this was the total debt. 50% how much? 1 lakh. 50% of what? 3,25,000. 50% of 3,25,000. How much? So how much will be transferred to capital reduction? 1,62,500. And for balance amount, they will issue new debenture 12%. How much balance amount? Balance amount now say 1,82,500. This become the answer. Once again, English. Easy, but concentration required and reading is required. Have you understood this journal entry now? Chalega. Let's see what journal entry. They may give two of, means I have done one compound journal entry. Let's see what journal entry they have given. So they have not given compound journal entry. So 2,50,000 debited, 25 debited, 50,000 debited, then they have transferred to Mr. X account, 3,25,000. I have given one compound journal entry. Then they give bank account debit to Mr. X 20,000. So we have also debited bank account. And then they have cancelled what? 162. And how much transferred to debenture? 1,80,000. So our means I have given one journal entry. They have given 3 journal entry. Now, even though you have given one compound journal entry, they will give marks. Or if you want to pass this 3 journal entry, do this 3 journal entry. Means in my regular class, first I give separate journal entry, then I give compound journal entry. Okay, sir. Understood? But compound journal entry is more easy to apply. Understood? Done? Aage chale? Yes, sir. Next point is what? Now balance point will be very, very easy. I think this up to point number 4. One more point is there. The remaining claim of debenture holders, including outstanding interest, to be reduced to 60% In consideration of reduction, the debenture holders are to receive new 9% preference shares or face value. Very easy. So what they are saying, remaining claims of debenture holders. So remaining claim is 4,50,000 minus, sorry, 4,50,000 minus 2,50,000. How much? 2 lakh. So we'll do old debenture account debit 2 lakh, including outstanding interest. So interest account means interest payable. How much? 60%. So how much? 45,000 minus 25,000. How much? 40. It was 45,000. 45,000 minus 25,000. 20,000. So what is your journal entry? Old debenture account debit, interest account debit. How much reduce? 60%. So 60% reduce, and for balance 9% preference share capital will be issued. For the balance 9% preference share capital will be issued. So your journal entry: old debenture account debit, interest payable account debit, to capital reduction with 60%, and balance will be transferred to 9% preference share capital. Understood? Let's see what journal entry they have done. Correct. So 10% debenture, interest on debenture outstanding, to capital reduction, and to 9% cumulative preference share capital. Okay, sir. Chalega. Next point. Point number 6. The taxation liabilities you settled at 12 lakh. Similar point we have done. So what is the provision for tax given? Check karo. Provision for tax given how much? 1 lakh. Settled at what? 1 lakh. So how much increase? So what journal entry? Capital reduction account debit to provision for tax. Let's see whether they have done payment or not. Normally, if nothing is given, payment should not be done. Let's see what is their viewpoint. So what they have done? They have done payment. Look. So sometimes they are doing payment, sometimes they are not doing payment. Means some of the question they have not done payment. So this I will say, write down one assumption that we have assumed payment has not been done. So I will always suggest that whenever this type of question done and settlement, payment point is not given the question. So how can you assume by your own that payment has been done? It is quite possible in the next point payment wala information has been given. Quite possible. Okay. But I think not given. So for this point now I will always say, just write down that we have assumed payment has not been done. Or if you are doing payment journal entry, just write down payment has been done. Okay. Chalega? Yes, sir. Then market value of non-current investment 2,50,000. Investment is to brought to market. You can do this simple. Inventory equal to 1 lakh at book value will be taken over by remaining creditor in full settlement. Means now you need to find out what is the remaining creditor. So creditor was how much? Total creditor is given how much? Total creditor is given how much? Without trade payable is where? Trade payable. Other trade payable is 1,30,000. But how much Mr. X was holding? So 1,30,000 minus 50, how much? 80,000. Okay. So creditor account debit 80,000. They have taken what? They have taken inventory. So inventory of what amount they have taken? Inventory equal to 1 lakh at book value. So to inventory book value how much? 1 lakh. So creditor account debit to inventory 1 lakh. Okay. Will be taken over by remaining creditor in full settlement, and difference will be transferred to capital reduction account. So creditor account debit to inventory and the balance will be transferred to capital reduction account. Okay, sir. Can we move? Yes, sir. Then a bad debt provision of 2% created for trade receivable. So trade receivable is coming how much? Check karo. Trade receivable is given 2,30,000. 2% is how much? 2% is how much? 4,600. So your journal entry capital reduction account debit to provision for doubtful debt. आगे चले? Yes, sir. Next point is what? Plant and machinery written down to by 20%. This you can do. You can write down it by how much percent? 20%. You can do it. Company will further issue 12% debenture for such amount which is sufficient to pay off bank overdraft and the outstanding liability and other outstanding liability, and maintain a cash balance of 85,000. For this you need to prepare one bank account. Because you need to find out how much amount is required. To pay off bank overdraft and other outstanding liability. For that they will issue what? 12% debenture. Means your journal entry will what? Bank account debit to 12% debenture. But what is that amount? For that you need to prepare bank account. Let's see bank account how they are prepared. So they are prepared with bank account in working note. They are prepared. So opening balance is given 65,000 bank overdraft. This will be given in the balance sheet. Okay. This already we have done uncalled capital. and Mr. X also brought 20,000, correct? And can I say this 85,000 and we have also paid because they have assumed tax has been paid. They have assumed tax has been paid. So by tax, how much? 1,20,000. This is the minimum balance of 85,000 required as per the information given in the question. It means how much required from 12% debenture? 2 lakh. You will pass my journal entry what? Bank account debit to 12% debenture. Bank account debit to 12% debenture. Understood? Yes, sir. The next point is what? Correct. The amount available by the scheme shall be utilized in writing goodwill, debit balance to it means capital deduction to goodwill, to PL account, and any surplus will be transferred to capital reserve account. For that, you need to prepare one capital deduction account also. Done. So this was not difficult question. After that, prepare notes to show revised share capital structure of the company after completion scheme. Means they have not asked balance sheet also. They have only asked the note of share capital. Yeah, how much authorized, how much issued and subscribed. That we can do. It was a question of 14 marks. So it was not a difficult question. And similar question we have in ICS study material. Means I think I have taken also same type of question in my expected list. देखो A limited is to cancel है ना, same similar question is there ना. Okay sir, so of course you can do it. Now let me come to the last point of this chapter. I will say this chapter is totally information given, apply that all journal. You need to understand what is the information given. My suggestion is that suppose there are 15 questions in ICS study material. Understood? In all questions, means I will say out of 15 questions, 4 or 5 questions will be doubtful questions. In the doubtful question, only 4 or 5 points will be doubtful. Just give star mark in that doubtful point. Before exam, revise that point only and revise the journal entry. Because if suppose that point only will come, then only you will do mistake. So it means you have understood, but you are not able to understand the English in exam. So sometimes we are not able to translate it. And because of that reason, we are doing some mistake. Okay? Correct. Let me come to the last point. Surrender of shares. You know surrender of shares? Means a good point, but sometimes they are asking, normally they are not asking this particular topic. But suddenly asked, so it becomes dangerous. So do you know about surrender of shares? Surrender of shares? Who will explain what is surrender of shares? Bolo. Surrender of shares means what? Just try to understand. Suppose you are all equity shareholders and they are debenture holders. So can you say in a loss making company, entire loss belong to whom? Equity shareholders. So will not negotiate with you because entire loss belong to you only. But can you say they will not be any loss? Means we need to pay their entire amount. So we'll do negotiation with you. What negotiation we are doing? Suppose you are holding 10 lakh debenture. So we'll say reduce 5 lakh. Reduce 5 lakh and we'll make you our owner. Means we'll give you equity shares. Can you say an internally reconstruct company, if they are issuing new equity shares, that will dilute earning per share because number of shares will increase, and therefore internally reconstruct company should never issue new equity shares. Means when we are passing this journal entry debenture account debit to new equity share capital, that is not correct from this particular chapter point of view. Therefore, what we'll do, we'll say you reduce the claim and we'll make you equity shareholders of the company. But we need to give you equity shares. So what I will say, I will come to you. I will say if you are holding suppose 1 lakh shares, so I will ask you to surrender 50,000 shares. And you will surrender. Because you will not surrender, they will demand, and if they will demand their payment, they will to liquidate the company. So you will never want to liquidate a company, you will wait now because right now you are not getting anything. Because it is a loss making company, entire loss belong to you only, so you will always surrender. So out of 1 lakh you will surrender 50,000 shares. So this is known as surrender of shares. So you have surrendered now. So right now if you have surrendered, this is with the company. So this is known as surrendered shares. This is known as surrendered shares. So what journal entry will do, once you have surrendered, our journal entry will be equity share capital account debit to equity share surrendered account. equity share surrender account. Understood? Now this is equity share surrender. Now out of this surrender share, some of the shares will be given to whom? Debentures. Are you getting? So what journal entry will do? Means we are transferring some shares from surrender share to whom? To debenture holders. Because they have reduced their claim. Because they have reduced their claim. So there are 2 points. First, they reduce their claim, and we are giving them what? Equity share out of surrender shares. Out of surrender share. It is as simple as we are converting debenture into what? Equity share capital. Understood? So first reduction, what will be journal entry? Means they have reduced their claim. What journal entry? First reduction, liability will reduce. So what journal entry? Debenture account debit to capital reduction. And because of that reduction, we have given what? Surrender share. What journal entry? Means our surrender share will decrease and that will become equity share capital. So what journal entry? Equity share surrender account debit to equity share capital. To equity share capital. Understood the point? No, you have not understood. You have not understood. Have you understood? You have not understood. 1 second. Let me give, if you have understood, now whatever I have said, let me create one example for this. Okay? Suppose this is the trial balance of the company. Okay? Oh. This charge. Chalo. Write down one trial balance. Suppose we have a equity share capital of rupees 10 each, 10 lakh. Understood? Means how many equity shares? 1 lakh into 10. And we have a 12% debenture of rupees 20 lakh. Of rupees 20 lakh. Correct? Now, additional information will be given. Additional information will be given. So, additional information is what? Ki equity shares will surrender how many equity shares? 50,000. Equity share holder will surrender 50,000 of their equity shares. So, they will surrender. Then, debenture holders will reduce what? Will reduce 50% of their claim. They will reduce what? 50% of their claim. Are you able to understand? Means out of 20 lakh, how much will be reduced? 10 lakh will be reduced. Okay? For this reduction, 50,000 equity shares will be issued to whom? Debenture holders out of surrendered shares. Out of surrendered equity shares. Understood the question? Now, bata. First journal entry what? First, this journal entry, we will say equity share capital account debit to equity share surrender account. Have you understood? So it will be 50,000 into 10 means how much? 5 lakh. First journal entry, have you understood? Correct. Second journal entry what? We reduce 50% of claim. So 20 lakh into 50% how much? 10 lakh. So what journal entry will do? Debenture account debit to what? Capital reduction how much? 10 lakh. This you have understood? Any doubt in these two journal entry? Any doubt in these two journal entry? These two journal entry, no doubt. Now, what will be journal entry for this? Think and say, for this reduction, 50,000 equity shares will be issued to debenture holders out of surrendered equity share. What will be journal entry? Equity share surrender account debit to equity share capital. Everyone saying this? Pakka? Means 100% correct. Means you have understood. What will be the amount? 5 lakh or 10 lakh? 5 lakh or 10 lakh? Means beautiful, you have understood. Means these two amount may match, may not match. So don't compare these two amounts. It may be equal, it may not be equal. But 100% correct. Means you have understood. Means can you say 50,000 surrendered and 50,000 reissued? Means now all the surrenders here is utilized. It is quite possible in this question, suppose I have said out of 50,000, 30,000 has been issued to whom? Debenture holders. Then what is the balance? 20,000 surrendered that remain unutilized. So any unutilized surrender shares will be transferred to capital reduction account. Any unutilized surrender shares will be transferred to capital reduction account. Topic is over. Topic understood? So what is given? Now let us come to the concept. First, surrender of shares by shareholders. What journal entry? Share capital account debit to share surrender account. For reduction of claim of creditor without reissue of shares from shares surrendered to such creditor. Means for only reduction of creditor and we are not giving any surrender share. Then what journal entry? Means this is reduction of liability. So liability account debit to capital reduction and no issue of shares. But for reduction of claim of creditor by reissuing shares from shares surrendered to such creditor, then there are two journal entries. First reduction, liability account debit to capital reduction. Then what? Share surrender account debit to share capital. Understood the difference? So only reduction, liability account debit to capital reduction. For reduction and transfer of shares from share surrender account, then what journal entry? First reduction, liability account debit to capital reduction. Then share surrender account debit to equity share capital. For cancellation of unutilized surrender shares, whatever unutilized, that will be transferred to which account? Capital reduction account. So share surrender account debit to capital reduction account. This chapter is completed from my point of view. Okay, sir. Now, if you have understood, you can do the question based on this. Correct. Sometimes they say that surrender shares is immediately cancelled. Means surrendered and immediately cancelled. So immediately cancelled means it will not be used for reduction liability. It will be directly transferred to capital reduction account. So sometimes they say surrender shares are immediately cancelled. Thank you very much. Immediately transferred to capital reduction account. Understood. Done. Chapter is over.